It is now time to get our focus over on the markets. And joining the broadcast this week was Heather Ramsey. She, of course, is with the ARC Group. Here's our conversation that took place on Wednesday afternoon. Some farmers a little bit happier with the prices we've had since kind of the first part of January. A lot of it, I suppose, can be tied to a USDA report that came out. Let's talk about we could talk about the merits of USDA reports, right, wrong, or otherwise. The numbers there, markets reacted. What was most important to walk away from those reports?
I think there was two things that really stood out to me on that USDA report. One of them was the reduction in both the corn and the soybean yield for 2024 crops. I know the market was expecting a decrease to corn. The elusive 180 has not happened as a national average yet. We did set a new record at 179.3, I believe, but we didn't quite hit those benchmarks that I think everyone's assuming we're going to get to. That 179.3 was significantly lower than the trade guesses. And whenever you have a report reality versus expectation that's that out of line, you get a pretty nice firework kind of day. And thankfully it was positive for the farming community last week. Soybeans was a reduction as well. I don't think anyone was looking for a big change in soybeans. We didn't get a huge change. So corn was really kind of the catalyst there. And then I think when you pair that with the acreage we had last year, it actually drops our carryout to 1.54 billion, which I would have to go back and look at the last time we had a 1.5 billion bushel carryout. If we can continue to drive exports and drive usage of corn and get that below a 1.5, this is like crazy supportive to the corn market. And I really hope that we can incentivize some of these things, but we're going into a part of the year that's just kind of notoriously tough for big changes in demand on corn. So we'll kind of have to see what the market environment looks like, especially after this coming week and a new inauguration coming.
Okay, since kind of that early part of January, we're plus 20 for March corn, plus 35 for March soybeans.
Yeah.
Is this a time where you're seeing some farmers make some moves, try to put some sales on the books, especially for old crop?
Yeah, I think it's been a good opportunity, especially for old crop and then new crop corn as well, specifically. But we saw this increase in December. We saw kind of ratcheting up a little bit. It was really slow. And then January hit and we kind of got a little action here. So this has been a good opportunity. That March board floating up towards 470s. It kind of tops out around a 480 number though. This drive that we had from the report day really did back basis off. So unfortunately we had a brief moment where I think you could probably sell some 460, 465 plus cash in the state of Nebraska. But then end users took some protection with that market increase. So we're kind of sitting back into that 450 territory. It generates some cash. It's good sales. I mean, we haven't had much opportunity at a 450 cash or better in the last couple months. So it's been a good opportunity to clean up things in the bin, get some cash generated, move along and get past this 2024 crop.
Resistance level, I'm sure, being observed in corn around that 460 mark. Let's talk about the fund position. This time of the year especially, we're always looking at where the funds are because that matters to the markets. Let us know what you're seeing when it comes to the funds and what you're tracking in terms of its relevance right now.
Yeah, so when we look at the fund position, when you're in a bull market, those funds just continue to buy and buy and buy every day. And for the longest time, we've not been in that situation. We've seen them be short, be very bearish of commodities. When we look at corn specifically, just as recently as like the beginning of October, they were short 100,000 contracts of corn. And then between kind of cleaning house in December and then repositioning as we got past the first of the year, we've seen them flip to being over 300,000 long in corn. So if you do the math on that, that's net over a 400,000 contract swing. I mean, that's a big, huge swing. Now we've seen them go as long as, 500,000-600,000+ contracts. So obviously we know that they can do more, but I think really for the past year that we've had, it has been tough to get the money that interested in taking any sort of sustainable long position. We've seen them long maybe 40,000, maybe 20,000. So to see them actually get long multiple hundreds of thousands of contracts, there is a little confidence in there for them. The question is, how long will they maintain those positions? And I mean, a fund bull is the same as any other bull. Bulls got to eat every day. They're hungry every day. They need a piece of information. And so that's what we're going to need. We're going to need another catalyst to get these funds kind of reinterested and pushing to another kind of investment long level.
Okay, speaking of that, there's a lot of news out there right now. We've recapped the USDA report on that Friday. Those are released. We had some new guidance come out, which thought that'd be a big impact to the markets. You factor in South America weather. You mentioned the inauguration coming up.
Yeah.
What does all that tell you about opportunities for producers?
There will be something. Like, there are enough catalysts out there. Something will hit and something will trigger. It will give us an opportunity. Unfortunately, I think it's been so slow to get that thing to hit the market that it may not be as wild and colorful and easy of a pricing decision when we get that to come to fruition. I also think there's just enough expectation that something that's coming that, unfortunately, if it doesn't, or it doesn't come in a specific time frame, that can also keep a lid on the market as well. So really, the volatility is high because we're up and we're down, we're up and we're down, but I don't know that the length in which we can run one direction or the other has increased astronomically either. Now, like, everything is possible, and the running joke in my office is that that wasn't on my bingo card this year. So we're kind of waiting to see what that item is. And like you mentioned, there are so many things out there right now between all of the little pieces. If you can get one or two of those to kind of fall in line at the same time, that's extremely supportive. On the flip side, there is a lot of pressure from South America. Even though the weather premium exists today, Brazil's crops look like they should be astronomical. And so that's going to put pressure and keep a lid on things. I really look to see us kind of float between ranges. And when we bump up against these high end of these ranges, we need to be taking action and kind of controlling the things that we can control on the farm.